How about this as a headline? The Fed sparks the best week for stocks in 6 months while the US dollar and yield rates plunge. Too boring? Okay. How about this as an alternative headline? Markets jump on optimism that the US economy is sliding into recession. Nah, that won't work because it sounds too much like an oxymoron. All right then, think about this. The Fed won't cut interest rates until stocks plunge, which won't happen because the Fed is expected to cut interest rates if stocks plunge. That sounds too much like deja vu all over again. Well, how about this was the biggest weekly point gain for the Dow in history? Sounds like I'm making this all up, but I'm not because they're all true. The past few weeks have presented some of the most complex and mind-bending markets I've experienced in a long time. What I try to do is imagine a world in which the ideas in my head about that world actually have to comport with the way that world really works, because there is a severe penalty for failing to recognize that. And the list of those that don't recognize what is happening continues to build, including the homeless, politicians, the bonehead media, the declining middle class, and the ever widening gap between the haves and have-nots. And what about that ice cream cone on the thumbnail? Well, I'm glad you asked. If you wait until the end of the video, I'll show you. So let's take a look at the charts because we have another humdinger. We're starting out with the 20-year monthly chart on the spiders, and the close on Friday was 287.65, double top there, the bottom in late 2018. What I'm looking at though is the MAC. And what I'm looking at in the MAC is the bottoming process that we seem to be going through right here. I was thinking that the most similar bottom was the 2015-2016 timeframe, maybe the 2011-2012, but it also seems to be somewhat similar, at least to the last portion of the bottoming process in 2002-2003. You can see currently that the fast line went down here, moved through the slow line, then made an attempt to come up and cross through, got reflected back down here. So it's got this little dimple there. We have somewhat of a little dimple here. It's not perfect, and this one is even less so. And back here we have a little dimple there. Nothing's going to be perfect. These are ugly comparisons. But what I'm seeing here is that the market does want to make a bottom here and head on up. But there's a contradiction between, say, what the weekly is showing, and I'm going to get to that here in a moment. But looking at this process here, it certainly looks like we're having this small reflection back down here, along with the turmoil that we had in the last week or two, that turmoil with the market being very volatile up and down. But we're still relatively strong at that plus 10 level, well above zero. And it seems like the fast line wants to head back on up here. Maybe it's pricing in some rate reduction by the Fed. I'm not sure, but I think that's the game that the president is actually playing, going after China and Mexico with those trade tariffs and with those trade tariffs rolling off of India. And if that's true, all of those trade disputes may take the market down, but as a reaction, that may cause the Fed to lower rates. So maybe that's what the president is after. And I think maybe that's what the market is seeing here, but there is a lot of contradiction. So let's get to that now by going to the weekly chart. And moving to the 2-year weekly on the spiders, we can see that the top was there and the bottom here. And once we hit that bottom this week, it had a strong reaction and moved up to the current level. And that's a pretty strong move. Went right through the 20 and the 50 EMA on the way up. And that's a little bit uncharacteristic. I realize that we've got some volume and volatility, say, in late 2018 and early 2018. But what I'm referring to is the uncharacteristic move, say, in the MAC here. You can see that from the top there, we had a shallow move running on the fast line, and then it steepened a couple of weeks ago or so. And then this week, it just took a hook turn, as you can see there. It happens every once in a while. We saw one at this level here. Perhaps that reflection there, and then maybe this move in here. So it happens, but not all that often, particularly once the fast line moves through the slow line. So moving on down here, we can see in the histogram, same sort of thing, that little hook turn right there. Is it saying that the market wants to head up? Well, I think that's what it's trying to do, but I'm not sure it's going to be successful here. Simply looking at the price rate of change, it took a pretty violent move on up here, but it's still below that slow line. And it did go slightly below that zero line. So it definitely did weaken. So maybe we're going to see some sawtoothing before this thing finally bottoms out. I hope we see some sawtoothing. That would be a much healthier type of move than a knee-jerk move on up. But again, the Fed is playing games, and the market may be smarter than everybody else and expect a rate reduction here coming soon. Relative strength index also moved through that 50 line, but back on up here. So not sure if we're going to see some sawtoothing, but that is my expectation. I think that's the strongest probability. Looking at the stochastics, we can explain this one here too. This move looks somewhat similar to the action in that time frame and then the action in this time frame. So I am looking for that move on up here, maybe some sawtoothing and perhaps another shoe to drop as it did here in early 2018 and then late 2018. I think that's the strongest possibility. It could head on up and just say goodbye to any downtrend. But I think that the greater probability is that we're going to have some sawtoothing and then another shoe to drop here. So just be careful. This is a very dangerous market right now. So we see down here that the bounce off of the bottom there in the Williams all the way up here. But we've seen those bounces in this time frame here, perhaps not as strong, but still we've seen them. And then this time frame here. So I am more than half expecting some sawtoothing here, which means that the Williams is going to head back down again. And what that means for the market is that even though we're at 287, we may go visit 280, maybe below again here in the near future. That's the greatest possibility, and I think the greatest probability. However, we can head on up. I just don't expect it, but don't be surprised. And now for that ice cream cone. Let's take a look. And so if you listen to the old timers in the market, they talk about the topping as a process, and then the bottoming is an event. And the topping process sort of looks like ice cream. And then the event looks like the cone. So looking through the past of the market, you can see the different topping processes and then the cones. And currently, we have the topping process and the cone. So, thank you for hanging with me. You get your just desserts. For today, that's ChewDog Charts. Thank you.